Where will the market go since they were able to avoid a government shutdown at the moment? A number of weeks ago, we were talking about a 58-month cycle repeating in the market, and it is still repeating in the market. And what you see here is a picture of what happened back then. It turned out to be December of 2018, and the market pattern was extremely similar to what's happening now and has been for months before. What's really interesting about that cycle is that you can see how it was formed on the basis of three 19.6-month cycles, one after the other. And that the most recent market action since January of 2022 had a 9.6-month decline, followed by a 9.6-month rally, and then it started to go down just as it did in January of 22 and just as it did in December of 2018. That cycle is very important for the future of the market now. Note also that the government delayed the decision, the final situation with the shutdown possibility, for another month. And what's really interesting is the pattern back in 2018 isn't quite finished. It needed more time to finish, and ultimately it does go lower. In our most recent videos, we said we're expecting a little bit of a bounce off of the low last Wednesday and on the 27th of September, and we think that is still probably the case and should continue to go sideways, possibly up into the 9th or 10th of October, and then the next wave down will finish up and go down into late October, and that will be matching what happened back in 2018. What's also intriguing is this 19-month interval. If you repeat it over and over and over and over again, it lines up also with the 2011 financial crisis that was happening, where there was an issue about shutting down the government. It lines up with the 2007 high, right before the huge financial crisis. It lines up with the 1999 market, which we were talking about, to the day. It lines up with the 1987 market, which we were talking about, which is in progress. And it lines up also with the 1994 market, which was the most high correlation market in the last 16 months. So this particular one interval, this one cycle of 1.6 years, 19.2 months, it is really the granddaddy of the building block that many of the market cycles are based upon. Now notice, if we look at one iteration ago, you would think that the market's just going to keep on going down for 9.6 months. That is not correct. This cycle is not the only cycle in the world. There are many others simultaneously, and you need more than one or two of them aligning with each other to get a story for the future. A better mapping for the future would come from what happened after the low in December of 2018, which was a rally, and the rally lasted some time. And it did have pullbacks after that in the 2024, the equivalent of 2024 coming around, which matches our other forecasts, which we expect to rally up into January, followed by a decline next year for a few months, followed by a sideways market next year. And if you want to learn how we do this and how it's so interesting that not only is history repeating on the market level, but it's also recurring on the outer level, on the level of politics at this point. If you want to learn that, we're giving another course starting this Sunday, the 8th of October, for all that are interested. So to continue, this one cycle is a piece of larger and larger cycles that are multiples of this 9.6 month swing, and it is very important because you can locate many other cycles with it. It's a component of an 8-year and a 24-year and such, okay? So this very, very powerful thing that's happening, it showed itself clearly because it called the exact decline in 2022, and so far it's called the exact high in 2023, which may not last, but at least it's been showing itself as an important feature. On that note, we expect lower prices after this, somewhere around the 10th of October.